All right. Welcome, everybody, to session 5 of Shift Happens. Today, we have a guest that's going to be with us for at least half of our episode. Tim Harris, say hello.
Hello.
If you guys haven't met Tim, he and his wife have Harris Coaching, and they've been doing a lot to get word out in our industry about what benefits are here to help everybody on this call. And I'm not a big proponent of debt, never have been. So I haven't been an SBA loan expert for sure, but it seems to be a skill set that's in great necessity right now. So I have done my best to keep up with what is coming down to small businesses. We represent almost 49% of the GDP in this country. And for the first time ever, I think we're bailing out Main Street, and that's really encouraging. So with that, because there's no blueprint for this, there's a lot of uncertainty, a lot of misinformation, and I won't tell you that I'm 100% accurate on everything I do. I will try to source everything that I do show you, and show you places where you can go to learn more about these and how it applies to your own personal situation. Before we jump in, Tim, anything you want to share?
Nope. I mean, we've been saying the same thing. We've been podcasting about this nonstop for the
Yep.
last. Well, my wife's birthday was on the 12th, and I think the pandemic officially started on the 12th. So we were in Florida at a really fantastic automotive event for the week prior to that. When we were following it all, and we started podcasting and blogging about it at the exact same time when we were in Florida. So, did anyone predict it was going to get this bad? Nope. And I agree with you, Chad, with regards to the programs that are coming out. We can argue about the how much they'll actually make a difference down the road later. But right now, I agree with you completely that every agent needs to be applying for not just the PPP loans from the SBA, but they also need to be applying for unemployment, and they also need to be applying for forbearances on everything. Those are three things that every single agent listening right now must do.
Yep. We went through that. So I think it was session 2 of this series. We went through the tighten your belt and how to tighten up and really focus on cutting the right expenses. And I think I'm sure you'll agree with me there. Cutting all expenses in the real estate business can absolutely cripple you and take you out of the business. So it's identifying the non-essential expenses and not cutting off your lead flow, not cutting off your education budget, or things that are going to help you through this. So I think some people might be quick to cut coaching or mentorship or masterminds, and this is probably the time you need that more than anything.
Well, can I
This
preface that, Chad? I mean, if you're going to cut something as far as lead flow, I sure as heck wouldn't cut probate, that's for sure. And obviously, my self-interest is with people not cutting coaching either, but what I would cut is anything that has to do with buying buyer leads. All buying buyer leads things should just come completely to an end, and
Yeah.
focus all your best energies on being a powerful listing agent, because that's absolutely what you're going to have a high level of knowledge of through this real estate crash, which is coming.
Yeah. And that's what we talked about, and really focus on the cash conversion cycle. The reason probate is such a sweet spot in this is, you've got anywhere from a 30 to a 90-day cash conversion cycle if you're diligent. Where with internet leads, even on the seller side, if you're generating internet leads, short sale leads, those are all things that there will come a time where I say go and go hard on these things. But right now we're looking at a 6 to 12 month cash conversion cycle at least on those types of leads. So this is one of those niches where you can be the point of the spear. And so anyways, we're not here to sell you guys anything. We're here to show you how we can help. So let's jump in while we've got Tim with us, and we'll start with kind of what to expect. So what we've gone through already is in orange. We've been calling some audibles. I've deviated from my first outline, but I that's based on necessity. I think that the most important thing I can do for you right now is show you what these financial resources are. We'll eventually get into ops and talk about how you can solidify and gain new buyer and seller business. But for right now, I think this is the priority. So we're going to look at personal financial resources, then small business financial resources, how you can learn more and apply. And I hope I don't need this, but here's a disclaimer, guys. I mean, we're here to help. We're not loan experts. Like I said, we're becoming loan experts by necessity right now. But anything you hear here, you need to validate for yourself and make decisions with your advisors. Don't take the advice we give you as hard and sound financial advice to go do. Only you and your advisors know your personal financial picture. So take this as inspiration and education, but I'll show you at the end who you should be talking to about which programs. Anyways, hopefully that's unneeded.
Well, can I interject something here? We're getting a lot of people that are confused about, they go to the SBA website and they're confused about what program they should apply for. Agents, the only program you should be applying for really is the PPP program. All the others are too complicated and have a lot of underwriting. The PPP program will put money in your pocket the fastest and has the least amount of underwriting. And all of you, whether you're W-2 or whether you're 1099, will qualify for the PPP program, Paycheck Protection Program. So that's something that I presented this probably on maybe 4 different podcasts yesterday. And every time I said it, people ask the same question. I'm 1099. Do I still need to apply? Yes. The application date for those of you who are W-2s is today, April 3rd. The application date for those of you who are 1099s is April 10th. But you need to get it in because ultimately the problem with this program is it's limited in scope. And once the money is gone, it is gone. There's no guarantee that there'll be any more money thrown at this. So get all over it as fast as you can. As I'm sure he's going to talk about, and I'm hitting his high points just because I'm sort of sick of getting these questions, Chad. I'm sure you are too. This is a loan that converts into a grant. So vast majority of you won't have to repay this. So this is essentially your opportunity at bailout. And Chad, can I ask you a question? I'm curious if you're getting this. Sure. How many people are you getting that are giving pushback to the idea that they should be essentially on the dole? Are you getting anybody that are just sort of find it morally objectionable?
To accepting this money?
Correct. Is that an unemployment?
I guess I'm one of them. Like fortunately our company's growing and I don't have any real economic harm. So my personal values say don't apply for UI benefits if you don't need them because you're putting more pressure on a system. So that's just my personal take. If I do have economic harm, then I'll step up and take what I'm eligible for. But right now I'm only, I've taken advantage of the business side of it. But personally, and I'm very grateful for that, I haven't had any real harm. So my ethics are saying to me, pay your mortgage and don't try to take resources that you don't deserve right now.
We can talk about that.
I mean, I'm not looking to debate it. It's
no, it's not a debate. It's not a debate, just a suggestion. There's the Fifth Amendment, and there's something in the Fifth Amendment called the Takings Clause. In the Takings Clause, it specifically says it's the same thing when the government takes your land, right? So it's legally in the Constitution that says when the government takes something from you, they have to basically give you fair market value for it. And so unlike 2007 and 2008, because frankly, Chad, I think exactly like you, I find it makes the hair on my, makes me uncomfortable to even talk about it. But this is completely different. And if agents don't see that this is completely different, they're going to follow the way you and I are naturally wired, which is going to be like, I'm not going to take the money. They should all take the money because the reason that they're not making money and the reason that they're out of business isn't because of them or taking unnecessary risks or making mistakes or doing anything wrong. The government put them out of business. That's what the virus, but the government essentially shut the economy down. So under the Fifth Amendment, you can read it. It's the last part of the Fifth Amendment. It's called the Takings Clause. This is literally exactly the way the law is supposed to work. The government takes, the government has to give you fair market value. So the real question that's going to be interesting is whether they are actually going to give you fair market value for what you've lost during this time. That's where this is going to eventually go, legally, by the way. So it's kind of fascinating.
Well, I appreciate that. I mean, I kind of made my decision that, when I have real economic harm, then I'll do that. But I think anyone who's in production, and that's the difference I'll point out, guys, like I pretty much only represent big investor deals now. I'm not doing, I'm not representing single family home buyers and sellers. For the most part, I'm doing investor work. And just my own stuff. So if you're in production and all your all your deals are falling apart at the table, your buyers are going away, your sellers are pulling their listings, then absolutely you have already, been harmed by this. So, I'm not saying everybody should have the stance that I do. I was just trying to explain to you like my take on it. So let's we'll look at the personal aspects of this first. So on the cash assistance and relief for you personally, the government is scrambling to distribute checks to every American that had an adjusted gross income less than $75,000 or 150 jointly on your last return. That benefits $1,200 per adult, $500 per child. It has been extended to Social Security recipients. The bad news is what was supposed to be a 3-week distribution seems to be more like a 20-week distribution. It could be as late as August before you actually see these checks. So there's a lot of programs out there. We don't really have distribution channels set up for stuff like this. And we're leveraging, we're trying to leverage everything we can, including like the IRS, the Treasury, the existing banking distribution systems. So it's coming. It just may not be that efficient. As far as unemployment insurance, the other cash benefit you can get for the first time, I think ever, UI has been extended to self-employed, independent contractors, gig workers, sole proprietors, et cetera. They've also, they've extended unemployment benefits from 26 to 39 weeks. If you're overly optimistic and you think you're going back to work in 2 or 3 weeks, the government thinks it's going to be 10 months of high unemployment. So they've got our back. The state UI benefit is, I think rocket science is easier to understand and summarize than state unemployment insurance and how they determine how much you'll be paid. I'll just say this: if you get paid, if you qualify for $0 from state unemployment, there's still a $600 federal government overlay per week that comes down. So the least you'll make between now and July 31st will be $2,400 a month. Whatever your state might, however they're handling this and whatever they might throw in, think of that as the bonus money. But if you apply for the state benefit, there will at least be $600 of federal money there every week through July 31st. And
per person, not per household, too, per person. So 2 self-employed people.
Correct. Yeah. And I would, if I had to guess, I would say that $600 overlay will be extended, I would say, through the year.
At least.
Yeah.
I
have nothing. I've read nothing to see that, but just the pattern that I see and how governments are reacting, they've committed to throw everything at it. I mean, we've already created a lot of challenges and headwinds in the future with this. So what the hell? Let's keep printing. As far as a non-cash assistance for individuals, so some neat things are happening with retirement accounts. If you are on this call and you're over 72 now, or you were what is it, 71 and a half, if you turned 71 and a half in 2019, 2020 rolled over this rule. Let's just say if you're over 72, your required minimum distributions are waived for the rest of the year, for the entire year of 2020. Why is that important? Because the stock market just took a 35% loss. And right now you've got a basing phase looking to see what's going to happen. And I anticipate we'll see it go back down, and it probably will break through the lows that you've already seen. Just what I know about it and looking at the underlying economics behind the curtain. So if you have a retirement account and you want to hold your position, if you didn't get out before, let's say, the first week of March, if you're over 72 years old, you're no longer being forced to sell off those stocks in order to take a required minimum distribution. That's really important in an environment like this, because if you didn't get out soon enough, you better hold on and wait for the recovery, especially at your age. The other thing is, regardless of age, if you have a retirement account for temporarily, and I don't know, I think this is through 2020. I think it's a calendar year, but there's no 10% early withdrawal penalty on your retirement accounts. So you still have to pay your income tax. Like if you liquidate 401ks, you still have an income tax liability, but you're not paying the federal 10% penalty. And then the other thing is you can actually loan yourself $100,000 on a 3-year term from your own retirement accounts. So this is something, if you have IRAs, 401ks, you name it, you can actually you can access $100,000 of that capital without penalty, and you have 3 years to refund that back into the account. And I would probably say, if I had to guess, that will probably be forgiven too, because some people will spend that money and won't be able to replenish it. I don't think you're going to see big penalties here. Call your custodian. I mean, for these, every product is everyone's situation is different. So you should speak with whoever your retirement account custodian is, can help walk you through this and how to access that money. As far as tax credits for you personally, excuse me, the part of this stimulus that's called the Families First Coronavirus Response Act includes help for self-employed. So this is a tax credit for us if we are sick or our family is sick. So this will be up to $200 a day or 67% of your average daily pay. It also allows up to $500 a day for emergency sick leave if you are diagnosed with COVID-19. And you can get your full pay if it's a personal diagnosis. And then student loan forgiveness. Right now, what we know about this is it's at least 6 months of deferred payments and interest, and you can basically just account this as the checks were written, the payments were made. So and another thing, Tim, I don't know what your take is. I expect this to be pushed out at least throughout the rest of the year.
Actually, there's a report that came out this morning that supposedly they're going to do bulk student loan forgiveness up to $30,000 per student loan. Like what that has to do with the virus, I don't know. And the other thing, the prior slide, you were talking about the cash one-time money that's supposedly hitting this month. Retired people get that too, right there. So even if you're retired, you still are eligible for those payouts. So apply.
Yeah. Yeah, I guess, well, that's what I meant by the SSI recipients. So yeah.
Oh yeah, you got it. Right. You got it.
Okay, so we got retirement accounts. Now, business. This is something that Tim Yandel, my partner, just brought to my attention this morning. I hadn't seen this one come through. Excuse me, the CARES Act actually provided, part of that was $17 billion was allocated to existing SBA loans. And they're essentially giving you a break. I have a feeling this may be extended as well. But if you have existing SBA debt, there is relief on that. The shot on the right is what actually came to Tim from the bank who originated the loan that we have on our office building in Florida. But as of 2 days ago, your SBA payment is forgiven all the way through September 1st at least. And what this means, this isn't a forbearance or a deferral. This is basically they're counting those payments as made, principal and interest. So if you already have any SBA debt, you can see this one specifically as a 504 program, but it also applies to 7A. If you have any of those loans, I mean, I would recommend go to the lender that you originated with, and they should have the details. I think SBA reps are so choked right now that it's not even worth trying there. Go to the bank that originated your debt.
Hey, Chad.
Yes, sir.
Yeah, I talked to the other half. Of course, if y'all know how the SBA stuff works, half of the loans guaranteed by SEDCO, which is the state entity that was part of this. I also talked to the issuing bank on the other side and asked them what they're looking at as far as guidance on forbearance and any of the rest of this. And they said, we know there's going to be something. What we're waiting for right now is to hear what portion of this as a bank the feds are going to guarantee or give us forbearance on repayment for any of the stuff that we're holding on their notes. Then we're going to turn around and extend that back to you. And they expect to have an answer back on that either today or the first part of next week. And they will then deal with the other half of any SBA loans. And where this is important is if you're dealing with private lenders or anybody else who are dealing with properties that are covered with SBA loans, they need to be aware of this because some of that money is coming back. It frees cash back up for them to do other things with. So that's why it's important to be aware of this. There's money they're not going to have to go put out.
Yeah. Thanks for that. Guys, it looks like we're capped out. We passed 100 members. I apologize that it wasn't on Facebook Live as intended. We had some technical difficulty, but I am recording it locally and we will get this posted for everybody. So congrats to the lucky 100 who made it.
101.
All right.
Well, so something just to tag on, you probably already covered this on one of your previous shows. So if you did, just tell me to shut up. But the mortgage forbearances right now, they're not, like you were suggesting, they're not all sorted out with how the bank servicers are going to be handling it.
Right.
But they're in the process right now of essentially getting their own bailout for $100 billion, which is going to uniform the whole process for getting forbearances. Some people that we've been telling you to do it get 90 days without a struggle. Some people are getting 180 days. But the new general policy is going to be for 12 months with a 3-month extension. And there's no balloon payment at the end. They're going to tackle the missed payments and interest at the end of your loan. So, but I think you and I are thinking, frankly, the same thing. Once you put that in place, you're just going to take that away a year from now. Right, exactly. So I think this is essentially setting this economy up for who knows what. We're going to all be trading Indian beads.
Yeah. Everyone, I know a lot of guys that are running for gold.
Literally running for gold. Aren't you?
No, I'm not a gold guy, man. I've got a lot of faith in the U.S. as a reserve currency. I think worst case scenario is we might rebalance currency, but I don't think the dollar is going to be allowed to fail. We haven't played by fiat currency rules ever. Why the hell will we start now?
For sure.
Maybe I'm saying that because I decided not to buy gold and to buy real estate, and I just want to self-validate.
Well, I mean, what's fascinating about that conversation is now happening at the highest levels.
Oh,
and
yeah.
the reality of it is this wasn't a $2.2 trillion program. This was really a $6.3 trillion program. But then the Fed came out and said there's no limit to how much money they're going to be injecting into the economy. The total U.S. economy is basically $21 trillion a year. So the Fed's already said they're going to essentially put fake money into so there's no way how does that end? They didn't pull the money out from all the quantitative easing back in 08, 09. They're not going to pull this money out. This ends one way. It's called inflation, and if not hyperinflation.
Well, I mean, we've already seen it. Look at 2008. I mean, what does it cost you to rehab a house now versus what it was in 2011? It's damn near double, right?
The difference now is people are seeing.
I tell realtors the good news is we're paid on commission, and a house like a median home price is going to be like $800,000 at the end of the next decade.
Right, for sure.
Just because of the amount of money or currency we're putting.
Everything else is going to increase commensurately. So a gallon of milk will cost $20. Right. So even though the house has a higher value, it doesn't make a difference because everything else costs more too.
Yep.
So that's inflation and hyperinflation.
Yep. So the Paycheck Protection Program, I'll kind of run through just a summary of bullet points that I have. And then I have a sheet that I'm going to give you guys that's very, very detailed on all the loan programs. So the Paycheck Protection Program is part of the CARES Act. This is $350 billion in benefits are allocated coming through the U.S. Small Business SBA. The application period on this is February 15th through June 30th. Their target turnaround time is 36 hours, which is super aggressive for anything the government has their hand in.
Good luck.
Yeah, I applied more than 36 hours ago, and it's not in my bank account, nor have I gotten as much as an email. But your max loan amount is 2.5 times your monthly payroll, or $10 million, or the outstanding amount on an EIDL loan, which we'll talk about later. You can use this towards payroll, wages, commissions, rent, mortgage payments, and utilities. And this can be forgiven. However, you're going to have to prove how those funds were used. So one thing that's important, I talked to a lot of business owners yesterday that really just don't run their business like a business. They don't have an entity. They're a sole proprietorship. They don't keep a set of books. They don't have a balance sheet. They don't have a P&L. And the thing is, you're going to get audited on this somewhere. It might not be an IRS audit. Somebody will audit this and reconcile all this money at some point. So if you're taking this money, you need to understand on the PPP program, the forgiveness will be based on proof. So you need to be able to show where where these dollars went. And the best way to do that is using QuickBooks or whatever you use, you book it on your P&L. The max interest on these is 4%. It's a 10-year amortization, and you have at least it's very broad language as we talked about already, but it's a 6 to 12-month payment complete P&I deferral on this. So you don't have to start paying immediately. The best way to get this is my suggestion is go to a community bank. Support the smaller banks in your community that aren't overloaded, and apply. You can apply through any FDIC insured bank. This is something I'm gonna applaud the government here, because they took an existing distribution channel and used it in a completely different way. And I don't know how these small banks can benefit from this. I'm kind of unclear on if they're getting origination fees or if there's
They're
Okay.
getting paid commission on the back end. We actually, we gathered all the information that you're talking about from the banker side, and they're getting actually a pretty damn decent commission on the back end of all these programs.
That's great. Then I will underscore my suggestion, support your community banks,
For
because
sure.
coming out of this, your community banks will support you. Like all the things we talked about yesterday with creative financing.
Definitely.
If you work with community banks who are holding portfolio paper, you can create your own loan programs for your clients. So
I gotta go to another podcast. This is great information. Some of the best I've seen presented. A couple things. The PPP, there is no application fee. It should cost you nothing up front.
yeah,
Do be aware that there are a lot of scams that are going to be boiling up. I've only seen one of them so far, but you can just see how this is going to be a scam, where someone's going to say for $300, I'll get you your PPP benefits and whatever else. So be very, very careful. Do exactly what Chad's saying. The application, the FDIC insured bank lenders, all that information we've gathered, and all the forums and everything else. Do you mind if I tell them where they can get it, Chad? It's up to
no,
you.
no.
If you mind it.
Well,
Just tell
we can include it in our resources too. If you want to send me a link, Tim.
I will. It's all available to download. Basically, we're just doing this for all of our real estate agent clients. All they have to do is text the word survival to 31996, and essentially everything you've talked about. But like we talked about forbearances, which I know you did too. We've got a list of all the banks, their phone numbers, their contacts, usually their forms to request forbearance. We did that. We're scaling that out to like unemployment insurance. We got a list of every single state, how they go applying for it, what they're eligible for, the paycheck protection thing. You're dealing with a slightly different, more sophisticated, obviously, audience than I am. And so paycheck protection for any agents that are listening, that's probably the only SBA loan they need to apply for, because it turns into a grant. As Chad said, if you follow the rules, it's not that difficult. Based on what we've read so far, it looks like 100% of them are going to be turned into grants. You can't go to Vegas and lose all the money. I'm sure that won't work out for you, but other than that, they can just text the word survival to 31996. And I've actually got to go to another podcast.
All right, man. Thanks, Tim.
Thank you. Thanks for having me on.
Sure.
Bye.
Okay, guys. So yeah, this is what we were just talking about on the last side. So this is the Paycheck Protection Program. This is part of a screenshot from a sheet that I will share with you guys. This is going to break it down. So basically all the bullet points we just talked about, this is a little bit more detail than I can fit on a slide. And we won't spend a whole lot of time with this. I do want to let you know that I will back this up with more thorough information. It just doesn't fit too great into a live presentation. And this is just the second part of that. The next thing that we want to talk about is the EIDL, or the CARES Act Economic Injury Disaster Loans. There's been so far $350 billion in benefits for this through the SBA. The period on this is January 31st through December 31st of 2020. Their target turnaround time on these are 25 to 35 business days. These are more thorough applications. These are larger loan amounts. These have recourse to an extent. So don't expect to have this in 35 days, but you should be applying starting today. If you're an entity, not a sole proprietor or independent contractor, entities can apply as soon as today is the opening period at midnight today. So the uses for this are fixed debts, payroll, accounts payable, and other necessary ordinary operating expenses. This is more like a typical business loan than the Paycheck Protection. So this is collateralized over amounts of $25,000, but there is no personal guarantee until you get to $201,000. So what I'm saying is, if you're asking for less than $25,000 in a loan, it's going to come to you at 3 3/4 interest, 30-year amortization with a 12-month payment deferral, and you can use it on general operating expenses. And it does not have to be collateralized. If you ask for $25,001, then they're going to ask what you have for collateral: real estate, retirement accounts, gold, stocks, whatever you have. But you still don't have a personal guarantee up to $200,000. You're not personally signing. You can get up to $2 million on this program, but from $200,000 to $2 million, the terms don't change, but it is personally guaranteed. So just want to make sure you're clear on that. And as part of this, what Tim was talking so much about was the grant portion of this. So $10 billion of this money has been allocated to a $10,000 per business grant. Now, this is where a lot of the questions and conversations are happening, like what is a business? And a month ago, that was a completely different definition in the eyes of the SBA and the government. But today, as it stands, that those businesses like this grant can apply to sole proprietors, independent contractors, otherwise self-employed, gig workers, anyone who has a standalone entity. Now, some people have asked questions like, well, what about my daughter? My daughter waits tables and she's laid off. She's an employee. Excuse me. So, but the good news is, if you found your way to yourself to this call, you probably are eligible for all of this. So, this is a very simple application. It's been being pushed out as a rapid deployment program. In theory, the funds will be deposited through ACH. You provide your ABA routing number when you apply. All they're asking for, the application took me about 6 minutes to complete. I've done one for each entity that I own. And they ask you for your last 12 months revenue and your last 12 months cost of goods. You will most likely have to back this up with a balance sheet and a P&L statement. So they're going to be looking, when they reconcile this, you'll probably be asked to back it up. But this is as free as money gets, as easy as money gets from anything that I've ever seen in private lending or government lending. And pretty much everybody on this call does qualify for this and should apply for this. If you are granted this $10,000 grant and you also have EIDL or PPP program applications, this will be considered. They will reconcile this grant within your loan. So if for example, if you're going to get the $2 million limit above, and you also got the $10,000 3-day advance, the grant, they're going to give you $1,090,000. They will account for this money that you've already been paid. This is tied to the EIDL part. This is all coming through the SBA, so they're going to be reconciling all this, like cross-referencing. And again, this is from the sheet that I will share with you. It's a little bit more detailed. These are $2 million loans at 3 3/4, 30 years. They're hoping for a 1-month turnaround, but don't hold your breath. The grant portion of it is for $10,000. It is not a loan. It is a grant. And that, in theory, is being turned around in 3 days. But I'm on this is the third day since I applied, and I checked my account right before I jumped on this call, and the ACH has not cleared and it's not marked as pending. So far, I know hundreds of people who have helped do this, and so far I haven't seen, no one has said, hey, Chad, I got my check, I got my money. So they're doing the best they can. I'm not criticizing them. This is a hell of a thing to pull off in a matter of days. So I'm very supportive of the people behind this, and I understand it's 3 days is a goal, but you can't always deliver. So as far as recap, I'm going to share with you the sources that I'm looking at and the resources I've gathered. We'll post with this recording. For the SBA loans and grants, my suggestion is just bypass the SBA. They are choked. They don't have the bandwidth to help right now. And that started, 3 weeks ago when I was trying to get through and use their site. They were having those issues. So now it's even worse. So talk to your local banker. Go support your community banks, guys. There's a lot of things that, like, I'm a huge proponent of community banks. When the shift hit the fan in 2008, I had $142 million of pre-sold real estate, and I wasn't going to get paid on it because Wells Fargo, GMAC, and Countrywide all ran away with their tail between their legs. I was in East Tennessee. We developed an indoor water park project, and we had no lending, and nobody knew what to do. Nobody. So as a 25-year-old kid, I went and sat in community bank lobbies until I could speak to the president. And I said, listen, we're bringing this to your community. We're benefiting you. We're benefiting the greater community. And I'm sorry no one came to you, but can you step up and save our assets here? And I was able to raise the first tranche. I raised $42 million in 2 days, and I'd never raised capital. I'm just a West Virginia farm kid. But these community banks, they're responsible lenders for the most part. They deserve your business, and they will live through this. They don't, a lot of times they don't get the bailouts like the too big to fail banks. So I'll get off my soapbox. I strongly suggest stay at a community level bank, maybe to a regional level, but keep this business in your hometown. It's needed now more than ever. For any of the retirement account things that we talked about, as far as not paying the 10% early withdrawal penalty, loaning yourself $100,000, or if you're over 72 years old and you don't want to sell stock to meet minimum distribution requirements, talk to your custodian. So if you're whoever holds that retirement account, whoever you're getting those statements from, call that person and ask them go through your options and make your decisions with them. For unemployment, apply for your state unemployment insurance on your state's website. The pro tip here, guys, I mean, these sites are crashing in all 50 states. I would do it in the middle of the night, like wake up at 3 a.m. and do this while other people are sleeping. So hit it early or hit it late. If you're trying to do this in the middle of the day, they're getting choked out, and a lot of these sites just can't handle the traffic. You know, we've already got 6.6 million people that have been able to sit on the phones or get into the websites. That's just the tip of the iceberg. So many people are trying to get in and get taken care of right now. So I'm going to jump to Q&A, guys. I have not been looking at anything, so let me get my windows reorganized here. Tim Yandel, that's not a bass. That is a cutthroat trout. And it has a great story behind it.
I didn't say anything about your fish.
Oh, Jim said that, I guess.
Don't, you know, I know where you stole that fish.
Stole it. Okay. Let's start with Jamal.
And Chad, I'm going to jump off because I need to get on the company call. I've got everybody on that waiting, so I'm going to jump.
Okay.
Later, bud.
Later, Tater. All right. Let me jump over here to Jamal. Let's see if you're here. If you guys don't want to be interactive, you don't have to be, but I just feel like it's more fun. It's more fun for me than talking to myself. Jamal, you're on the air. You had a question about EIDL PPP. Did we answer your question already? Oh, there we go. Looks, you're unmuted now, Jamal.
Can you hear me?
Yeah. Did you get your question answered in the slides, or do we need to go back over it?
No, I think I got my answer to the questions. I think because of the 1099, I need to wait till April 10th to go to the bank and apply. Hopefully, I'm not sure if we can apply online or have to go physically to the bank.
You could probably just call your commercial loan officer at your bank. Do you have a banking relationship with any one person?
Not really. I mean, just I deal with Chase Bank, but nothing personal.
Yeah. Well, you might want to get a personal banker. Have a single relationship, because there's just so much flying around right now. But yeah, so if you're not using an entity, then you can't apply today. You'll be able to apply next Friday.
Okay. Sounds good. Thank you.
Yeah. Thanks for being here. All right. Got that one. Sandra. Sandra, let me find you here. There you are. Okay, Sandra, you are live on the air. You're still muted on your side. Maybe no microphone. All right. Well, Sandra said 2 SBA lenders I contacted for PPP said they are only working with existing borrowers and clients at this time. They won't be working with new applicants for the foreseeable future. Just my experience as of yesterday. Um, Hopefully that changed today. There you go. Oh, yeah, Sandra, I heard you there.
Hi. Yep,
Hey,
I'm here. Sorry. Yelling at my daughter.
no worries. So the lenders you talked to, were they local banks that you talked to, or were you talking to the
Yeah.
actual SBA?
No, I didn't go to the SBA. The SBA, I went to some of the most, the biggest producers of SBA loans. I thought, well, I'll start with the people that actually have experience. So I went to all of them first, and I got several responses that said, we don't even know what we're doing yet, but when we find out, we'll let you know.
Yeah.
And then late last night, I got 2 emails that said, we've gotten government guidance, but we're not working with any new clients, only existing ones. So for the foreseeable future, you're on your own. I did go to my local bank. It's Columbia Bank. So they're not like hype. They're not local, but they are like, I'm on a first name basis. And I said, hey, are you guys going to do these? And she said she was. So she said, do you want to be on the list for when they roll out? And I said, absolutely. So I think I've got it solved, but I was shocked to find out that they won't. I'm thinking of all these people that don't already have SBA loans like myself.
Yeah.
And the fact that I'm going to ask for help and they're saying, no, sorry, we're not working with new people.
Well, fortunately, and even just down the road from you, I've got a good friend in Salem, Oregon, that has multiple businesses and he has a very similar stance to me on community banks, and he's been talking with the community banks around in his region in Oregon, and they are actually, nobody knows what's going on. The SBA doesn't even know what's going on. You had politicians crafted this, kicked it out the door, and said, "Figure it out," which I don't fault them for. So it's going to take some time to figure all this out, and I can't imagine the reconciliation that's going to have to happen. But if you have an entity, today is the day that you can start applying for most of this through your local banks, and that's going to be your best bet. Just reach out, make contact with community banks guys, and see where they are. And if you like Sandra, if you get, just like with prospecting, if you hit a wall, go to the next one. If you hit a wall, go to the next one. Eventually you can talk to the right banker who's had the right conversation and can help you. The name of the game here is getting in on some of this before the money's gone, because as I told you, there are 25 million small businesses in the United States. Now 7.7 million of those are employer entities. So a lot of them are going to be single members, but those people are rushing into programs like this. So there's going to be less competition on the more complicated things, but you're likely to see that $10 billion in the grant money is just going to go like that. So if you haven't applied, make sure you're doing that, and we can sort out the details later.
Okay. Thanks.
Thanks for sharing your experience. And Sandra, you got a follow up. Who do I recommend listening to or learning from right now?
Yes.
What do you want to learn?
Well, I know you've got your masterminds, and you go out and get information from people you trust. You're
Yep.
one of those people I trust right now. I'm wondering who else I should be listening to.
I really try to do independent research. As somebody who, my reputation is extremely important to me. So rather than listen to what other people are saying and being influenced, I try to go do independent research. So I've been looking at stuff from senators' offices, congressmen's office, the SBA. I try to stay away from the mainstream media. I've been looking at a lot of stuff from the St. Louis Federal Reserve. I'm probably not the right person to ask that question to, because I'm kind of a mega geek, especially in times like this. Like, I don't want to trust what I'm being told when there's so much uncertainty, because I've already seen, and I guess I'm on guard because I've already seen so much misinformation. So what I'm trying to do is go to trusted independent resources and bring that back to you here in these sessions. And the stuff that I'll share with you is stuff that, that I've vetted and I feel I'm comfortable knowing is absolutely true. So that's my advice. And if as far as getting through this, I mean, there's a lot of great real estate coaches and guys on YouTube. Kevin Ward was one that I watched last night. Tim Harris was here today. I'm listening to what other people are saying too, but I think, the information that I'm trying to share with you guys, I try to think 2 or 3 steps ahead. So a lot of the things that I'm talking about, that I've talked about up until this point is showing you how to prepare for what's coming. And a lot of that just comes from my own independent research. As far as economic, if you want a true outlook, I would say go consume anything that you can find that Ray Dalio has done. He's the guy that understands this economy. He's the guy that's been warning us against it, and I have nothing but respect for his opinion. If you didn't watch it already, there's a great video he did, how the economic machine really works. And it's a 30-minute video from Ray Dalio where he breaks down the entire economy and how credit works. And if you can wrap your head around that, then you'll be able to more easily predict what's coming and how to react and navigate it.
Okay, awesome. Wait, one more fast question. Do you recommend pulling out all the money from an equity line before they lower the balance or shut it off?
So this is something, I put this in place in 2016 when our debt levels exceeded our GDP. When I was looking behind the curtain, that made me really uncomfortable. And I believe we formed a business debt bubble that was inevitable. The coronavirus just happened to be the pin that popped that. It could have been any number of things, including the Saudi Russian, oil pissing match over oil. But so I had set it up back in 2016 when I got to the point where I'm like, okay, it's time to jump. I kind of doubted my own plan, and I'm like, because I hate debt. I just don't use debt. I pay cash for pretty much everything. However, when in 2008, as soon as like banks started to pull their loan products, like their condo products, then some residential, then they tightened credit standards, and they just got increasingly more desperate until eventually they just pulled all lines of credit. Well, I was serving 408 millionaires and billionaires who had put 20% down and they were ready to close on their condos in Maui. And all of a sudden they couldn't. They had $12 to $15 million in real estate on their balance sheets. Their lines of credit were shut down. Their business lines of credit were shut down. So for me, knowing that this is not going to be a short-term thing, this is going to take a while to get through, I swept $100,000 off my lines of credit and just set it in check and money market. So I know it's there. I know I have dry powder. What I'll say, I'll disclaimer that if you're not going to invest the money at a higher rate than you're paying, then just leave it there. But if you plan to deploy the money and, if you're paying like my blended rate, obviously a business line is higher than a home equity. Home equity, I think I swept at 4.25%, and business I think was 7.25%. So it's a blended rate of like 5.75% or whatever. But for me, I just have to make sure that I get a better than a 7% return. But in real estate, I typically average about a 19% ROI, like annual return on multiple different types of investments. So you've got to look at it and say, you don't buy groceries with that money, you don't make car payments, you don't pay payroll. That is investment money only, because you could create your own debt bubble in your own household and make this worse.
Okay, awesome. Thank you.
I swept mine. That's
all right. I swept one, and I am suggesting it to another person just to be positioned for investing at a higher rate if the opportunity arises. So yep. I just wondered if that was the right thing to do.
It is. And if you're investing, understand, like by sweeping a line, by putting a home equity line of credit on and then sweeping that, you're raising your personal debt to income ratio. So debt to income ratio is that's going to tighten there if you're looking at getting any kind of a home loan. However, if you're using commercial loans, like if you're going to your community bank talking to the commercial lender, rates are unbelievable now. So you should be. Like that's going to be asset-based lending. So your personal debt to income ratio doesn't matter. This is what I consider responsible debt. This is you create personal debt for yourself to go out and create a down payment so you can then get more debt from a community bank, but that's investment debt. So if you're achieving a more than a 5, 6, 7% return on your investment, you're arbitraging. And I think that's responsible debt. Now, if you pull that money and do anything with it, if you pull your home equity line and go buy stocks, you're just asking to be financially destroyed. Make sure it's something that's slower moving, that you have experience with, and you're not taking massive risks. You can use that as a down payment and on a rental property, and then get an 80 LTV commercial loan from a community bank, and then rent to a healthcare professional with reduced rent and 6-month prepay. So you don't have to worry about courtrooms. You don't have to worry about rent checks showing up, things like that. So if you can think creatively and mitigate your risk, then absolutely access all the cash you can right now.
Awesome. Thank you.
Yep. All right. Thank you, Sandra. Next up, we have Ash. Ash, let me ask you if I want to clarify something. All right, Ash, are you? Nope. Looks like you're still muted. Unmute. All right, Ash. Ash should ask, I have an LLC and I'm also an independent contractor. Should I apply for both? I'm not sure why folks are having trouble getting unmuted. I'll just roll through these and answer. So my answer is probably yes. It just depends. If I'm assuming you have an LLC for one purpose and you're an independent contractor for another purpose. If that's the case, then yes, you should apply for both. If you have an LLC and you're contracting to your own LLC for whatever reason, then no. Like you will have to this will be reconciled and you will have to answer. And if you do anything underhanded, you run the risk of being audited, because this will most likely be reconciled on your 2021 tax returns. So just be honest. Like for me, like I have a holding company, an investment company, and a sole proprietorship. So I've applied to three different ways. And that was from, so I talked to 3 weeks ago, I talked to the SBA representative at the University of Central Florida. That's the one person I could get to answer the phone. And that was her best advice to me, is just apply early and apply for everything from every entity you have. We'll sort it out on the back end. Depending on what your structure is, yes, you should apply both as a sole proprietor, independent contractor, as well as as a member of your entities. Laura said, do you think there's any issue with receiving both EIDL benefit loans and the EIDL 10,000 and unemployment? Not that I'm aware of. They're not really strict on these, Laura. So they're, all these loans are working in conjunction. It's not an either or. It's not kind of a pick one. So if you get the PPP and you get the EIDL, and you're getting unemployment benefits, as long as your business is truly offline, then you're qualified for unemployment until you get it back online. But for me, I've applied for the EIDL and the grants only. I have not applied for unemployment because my income hasn't, thankfully, it hasn't been impacted. We're in, a pretty insulated space and probate. So, yeah, Renee, let me unmute you here. I know you have some follow-up questions. Oh, I guess maybe you had to run. So Renee, I don't see you here, but Renee asked, would you suggest paying down credit cards? I have a few questions around this. My answer is yes. There's nothing in place yet that says that that's going to be forgiven or there's a forbearance. For me, I buy every purchase I make. 99.9% of purchases I make are on credit cards. They get auto paid at the end of the month, or whenever the period is. And I just use that to get the 3% cash back. But you got to think, with credit card debt, in order to, you're paying probably, if you're really lucky, like a 16% rate, but probably more like 24 to 20 to 30%. And it's pretty hard to beat an investment return like in those numbers. Now, there will be opportunity in this to do that, but I would say pay down that debt so it doesn't eat you alive if your income does disappear temporarily. that debt won't be accumulating, because even at 25%, your principal amount doubles every 3 years just because of that interest rate. That's why it's damn near impossible for people to get out of credit card debt and at those rates, or payday loans or title loans, because it just the magic of the world, the wonder of compound interest can eat you alive when you're using those high rates. So I would recommend getting yourself out of credit card debt to get prepared. Anonymous attendee says, I have no P&L, have not paid estimated taxes for 2019. Can I still qualify for EIDL loan as a realtor? Self-employed with 0 commission in 2019. So this is one of those things, I don't know that your bank can even answer this. Because you have no revenue for last year. If you have expenses, what it's going to ask for is what was your revenue over the last 12 months, the previous 12 months leading up to this event, and then what was your cost of goods sold. So basically everything, the cost of it, and we're in a service industry, but what did it cost you to run that business and deliver that service? So if you spent $20,000 last year and you made 0 in commissions and you get a $20,000 loss, but you can show that you were active. Like if you have something to normally we would show a 1099 from our broker, right? Or K1s from our entities, but I'm not sure. I would say you can apply, and when someone reaches out to contact you before they fund the actual grant, you can have that conversation. But there's no harm in applying. Just tell the truth. Don't pump up the numbers. Use your real numbers. And as far as not having a P&L statement, if you're in the real estate business, then get in business. It's not, I hate QuickBooks. I'm the worst bookkeeper in the world, but I hired one because, I can pull that statement and show it to them. Like, anyways, I'll get off my soapbox. Buy the book. Greg Crabtree is a really great real estate CPA. Simple Numbers, Straight Talk, something by Greg Crabtree. So buy that book, get yourself set up on QuickBooks, and get your finances in order. So Coltu said, you're saying apply for unemployment and the PPP. I would say, if you're not working and you're out of your income has been impacted, then yes, you can apply for both. And then sort that out when you talk with the banker. Joyce says no mic. Can I count rental income from my units for the PPP? So if it depends how title is held. If you're looking to you're saying rental income, not rental expense. So you're I think, Joyce, what you're asking, if your tenants are not paying rent, can you take that income from the PPP? Let me see if you're here, Joyce. Oh, you don't have a mic. Joyce, if you could clarify, I'll try to answer that. Jeff said, is there a separate site for the federal unemployment? It's my understanding that the federal government is communicating with state, and that data is flowing up. So every time a state UI benefit is reported at the federal level, that $600 overlay gets added to that. And I believe the federal portion of that is coming through ACH. If you have ever paid or received a tax return through your bank account, it'll be sent to that bank account. So Teeny, let me get back to that slide. We'll go back through this. Okay, so this is for the PPP program. Just to recap here. So this is your payroll costs, like what this is allowed to cover: salary, wages, commissions, or other compensation, even tips. Like if you are paying, if you're a restaurant owner, you can cover vacation, parental, family, medical, or sick leave, allowance for dismissal or separation, retirement benefits, basically operating costs. As far as so costs related to the, I don't know, that one's new to me. But salaries, commissions, or compensations, payments of interest on any mortgage obligation, rent, utilities, and interest on any other debt obligations. So Joyce, I think what you were asking is, can you pay yourself the rent that your tenants didn't pay you? And my read on it is you actually can't. You should get forbearance on, if you have mortgages on your rental properties, you should apply for forbearance to protect yourself. So Teeny asked, can you repeat the answer for whether EIDL or PPP for realtor, for both? So sorry, I've got so many windows overlaid here, I can't see which slide I'm on, guys. Trying to navigate here. Some of you you can apply for both. If you are a realtor, you can apply for both, and both might work for you. If you have, especially if you're a broker owner and you have office staff on W-2 and you have 1099 contractors, then probably the larger programs here, like the PPP and the other loan program, could benefit you. If you're just a solo practitioner and you're just trying to find your way through and you'd like to have $10,000 as you move forward, then you should probably apply for the EIDL that you see here. If you do get both, it's all, like I said, they're going to be reconciled together. So if you've got PPP benefits, you got the EIDL loan, and you got the ELDI grant, they're going to take all that stuff into account. Margie, the book that I recommended was Simple Money, Straight Talk, Something Profit by Greg Crabtree. It's just a very simple accounting for non-accountants, basically. Alex said, do they pull your personal credit for these programs? For some of them they do, for others they do not. And I'll give you guys a rundown. So I'll show you, let me see if I'm sharing just a window. Okay, so I'll show, I think you see my whole screen now. So I'm going to send you guys this sheet. That's basically a rundown of everything. So you have all the SBA loans, you have the disaster loan. This one was phased out. This was the very first round of money that came down. The CARES Act and all the details, the 7A SBA loans, their express loans, veterans loans, capital lines, everything. This is a comparison of the EIDL versus the PPP programs. In addition, here is information on how all these big banks, these are mainly the larger banks, how they're handling it at the state level. What is happening in your state, what programs are there, and you can see this is a lot of information. There's a whole bunch coming out. Alternative lending, like ways you can get emergency cash for your business. We're going to show you information on what's happening with state sales taxes, state income taxes, and state unemployment insurance. So it will take you, I'm betting it will take you the rest of the week to understand everything that's in this sheet. But just know I'm trying to keep up with questions here and probably stumbling through this. I've got your back. I'll give you the resources you need, even if I'm doing a poor job here today. So Jim, you said in addition to the programs I've discussed, is there any information for Social Security recipient benefits The only thing that I know about like SSI, you're going to be able to get your the cash assistance will still come to you under this. So your recovery rebate. So Jim, you should get $1,200 per adult, and then I don't think you have any children under the age of. If you have any dependents still on your tax return, you can still get $500 per child, but this will be in addition to your normal Social Security payments. Just don't hold your breath for that. It's taking longer than we expected. So Tish asked who the gentleman I suggested to follow. His name is Ray Dalio. And let me see if I can, let me move some windows around, guys. I'm going to drop the link. Oh, I'm using the wrong search bar. And if you guys haven't read the book Principles by Ray Dalio, it is a massive book, but it's phenomenal. Okay, so I will drop this in our chat for everybody to see. There's the link to the video you should most certainly watch. The book on accounting. I'll also drop you a link to this. If you're not an accountant, you don't want to be, but you'd like to get your business in order, that is a great book to start with. And then just get yourself QuickBooks Online. You can also look at some of the online accounting companies. All right, there's that one. Next up, we have Irina. Irina, we'll have to, so Irina said, can a real estate salesperson apply for the 10 grand? Yes, you can. As an independent contractor, as a sole proprietor, as an LLC, you can apply for the $10,000 grant. And as far as the number that Tim Harris shared, I don't remember what it was. Kat can drop that in the links. Joyce, no, you're thinking, so the 2.5x on the PPP is your max loan amount is 2.5 times your monthly payroll. If you're losing, I'm not sure, and I know you don't have a microphone, so it's hard for me to understand exactly what you're asking. Carrie, that's a good question. So Carrie said, when you completed the application for the PPP loan, and I have not done that one. I've actually completed the EIDL for the grant. But she asked, did you have to supply supporting documents at the time of the app, or will this be done later? It will be done later. I think what they're going to ask you for is basically 12 months of a 12-month P&L, a 12-month balance sheet, and potentially maybe some bank statements and tax returns. I can't find clear. I don't think even the banks know. Just like Sandra was saying, I can't find really clear written underwriting standards. But I think you should be prepared to back it up if you're applying for the PPP. And if you're running it, if you qualify for the PPP, then you probably have a P&L and a balance sheet. But you're probably going to have financial documentation there. If you're on the EIDL and you're only trying to get the grant, they didn't really ask for anything. They said, what was your revenue? What were your cost of goods? And what's your bank account number to send the money to? Now, if you do the EIDL full, if you end up moving that into the loan at a larger number, then you're going to need more supporting evidence, I'm sure. Renee says she's here. I couldn't find you when I came looking for you, Renee. Oh, there you are. Okay, Renee, you are unmuted on my side.
Can you hear me?
I can hear you loud and
Oh,
clear.
very good. Yeah, I didn't see the little pop-up before. Anyway, thank you for being here. So informative. I think you answered my question. So, fortunately, I have like a Navy Federal Credit Union and USAA, so they don't gouge too much on the prices. I've got like across the board on 4 credit cards, like 12%, but it still starts to add up. It's a pretty hefty amount that I have on my credit cards, and now, of course, income is kind of all but stopped, right? Other
Yeah.
than any
So
potential
think of
probate.
it this way, even though 12% is an amazing rate for a credit card, how long does it take you to double your principal?
Yeah, I mean, it's killing me. So, yeah.
It takes you 6 years for that debt to double, doing nothing. If you just pay the interest, like in 6 years, you will pay double the principal amount. So that's why it's the magic of compound interest can also be some pretty dark black magic, right?
Mm-hmm.
It doesn't always work in our favor. Did we answer all your questions? Did you have something else?
Yeah, no, I think so. It's really just a think out loud than an absolute question. I know you're not, an accountant, and I do have some savings in IRA. I guess like a lot of people in the world, we're a little spooked. It's not that I don't have faith that I'll ever
Well,
do
let's
it, but
talk about
another,
your IRA. I think that this is useful. I do have quite a
yeah,
bit of experience with that. Tell me about is it a traditional or Roth?
it is a traditional. One's traditional, one's a SEP, and there's not a whole lot in that SEP. The other one got rolled over from an aunt who died. So I can access all of it, but then as you said before, I've got to pay income tax, and then I have some savings, just straight cash, but I don't want to blow through my cash just to pay off the credit card and then have to dip into
So the other
IRA.
thing you can do, like, and this is a little off topic, but I think we've got, I don't know, we've got 100 people on here looking for ways to move forward. I'm a huge fan of self-directed IRAs. So you can
Mm-hmm.
take those 2 retirement accounts you have, roll them over to a single custodian into a single self-directed IRA, which mine is a traditional IRA, but I have checkbook control. So my IRA owns 100% of the shares in a Virginia LLC, and that LLC has its own EIN number, bank account, debit cards. So I can actually go to the courthouse steps and I can go to the bank, pick up a cashier's check, go to the courthouse, buy a foreclosure house, and my IRA owns it, and I don't have to ask anyone's permission. So
Mm-hmm.
that's one thing that I would suggest you look into. There's very few companies that can do it with checkbook control. And I only suggest that if you really have your act together and you understand the laws and the consequences if you commingle funds or participate as an unqualified rep party. Otherwise, you can go with companies like Equity Trust or Entrust. They do self-directed IRAs, but they basically babysit you. So you have to ask them for the money and show them the contract. They release it almost like a lender draw. Where mine is with Provident Trust Group out of Las Vegas. They basically say, okay, here you go. The money goes from the custodian into my LLC bank account, the LLC that's owned by the IRA. And then that LLC just acts like a normal company. So like I do a lot of mortgages that way. And a lot of people's first response is, well, I don't have enough money to do that. You can cross collateralize. So for example, back in, I don't know, it was in October, an investor here in town, he's like, hey man, I need to borrow 30 grand to finish this flip. And I'm like, all right, what do you own? Let's see your balance sheet. And he's like, well, what do you mean? Like, I'll pay you back. I'm like, yeah. And if you don't, I'll have a first position mortgage because we never know what could happen. So show me a free and clear asset. I'll slap a first on it and I'll give you 30 grand. So even though I don't have enough, I didn't loan him, $250,000 to do the full flip. I was able to secure a $30,000 investment with a first position mortgage, 1% origination, 15% interest. So even if you have small balances in those accounts, if you can get them moved over to a self-directed IRA, you can do a lot of creative things in an environment like this and make big gains. Because at 1% origination and 15% interest, I averaged last year at 18.97% APY. So at that rate, my money doubles about every 3.8 years. I've doubled my own money, the opposite of the credit card scenario, right?
Mm-hmm.
So you might want to look at consolidating some of those smaller retirement accounts into one pile of principal, turning in under the direction of a custodian who does self-directed IRAs. And you can choose if you feel like you understand it well enough. I would recommend going to Provident Trust Group, because they don't babysit you. They just say, okay, there you go. Once a year, you send in your valuation form. Where with Intrust, Equity Trust, and many others out there, their role in that is telling you what you're allowed to and not allowed to do. It's not really that complex. Pretty much you and your family can't benefit or enjoy the real estate or the investments. Otherwise, you're good. Just read up on unqualified individuals. But that's something you could do, Renee, to take a little bit of money and turn it into a whole lot, while people are scrambling while financing stabilizes.
Okay, I understand. I actually understand the more than the general concept of what you're saying. So without you getting any more detailed, I know we're here at time, and maybe do or don't feel comfortable doing a separate conversation on this or having somebody from Providence. Should we just reach out directly?
That's a good point. I could do one of these shift happens, because I've coached a lot of people. Unfortunately, most people, I think, get overwhelmed with the details like I just threw out, and they just don't do anything. So maybe I could slow down for a change and do an hour session on that. I'll put that on the schedule, and maybe Provident will come. Maybe I can get one of their guys to come and answer questions, and then I can just,
Thank you.
I'll sit back and have a cocktail while he does all the work.
Cool. Thank you.
All right. Thanks, Renee. Who can lend to someone with Soledad? Let me find you here. Make sure I'm understanding you correctly. All right, Soledad, you are unmuted to ask your credit card question. That's interesting. I can see that you're unmuted, but I can't actually can't hear you. So Soledad asked, who can lend to someone with a lot of credit card debt at a lower interest rate? I'd like to ask the scenario. Like I've got clarifying questions. Usually the answer is nobody. If you have a lot of credit card debt personally and you're looking to take on more personal debt at a low interest rate, that's most lenders are going to look at that as a very risky loan, and that's why you're not going to get both of those things. If you're looking for investment loans, even if you do have a bunch of credit card debt, I mean, that's the beauty of commercial lending, is it's more asset based than it is based on your personal finances. Now, your personal finances certainly can benefit you, but if you need a loan for a deal, you can go to a hard money lender, go to private money lenders, think about people who are sitting out of the stock market right now that don't have, they're losing money to inflation every day. So doctors, dentists, people, especially doctors right now, they are just, they're having their butts handed to them. They don't have time to make investment decisions, and they won't for months. So instead of sitting there not investing, if you can show them that you have a good project and you can secure their position, then you can get loans from them at, probably in the 6 to 8% range, which for private money is, as you referenced, low interest debt. Hopefully that was helpful. Nancy asked, will a recording of this go out? Yes, when we finish this, I'll have to pull it. We'll probably upload it to both Facebook and YouTube organically, since our live transmission probably didn't work. Okay. Now, Joyce, I'm understanding a little bit more. So Joyce said, can I use the rental income off my Schedule E as income? Yeah, so that's business income. If as long as that entity holds the properties, that's a business income. My cursor keeps disappearing. Sorry, guys. Nancy. Let me find you here, Nancy. Nancy Callis, are you there? I don't have a very high success rate with finding you guys with microphones. All right. Nancy said, if you have rental income, but your renter moved out this month and you don't have a new tenant yet, can you apply expecting it may be harder now to place a tenant? Yeah, so that's one of the interesting things. And what the SBA representative that I spoke to from the University of Central Florida, she said, don't worry about it. If you don't have economic hardship now, just apply. You can project your losses. So if like in some of these, you can actually project the economic harm. And like I said, there's going to be a lot of reconciliation to clean this up. The name of the game here is trying to rapidly deploy this, and then I think they're going to have a whole bunch of reconciliation on the back. Alex, we will probably, well, Alex said, are you sending these info sheets? We'll link to this wherever this is posted. We'll have the resources that I've shown with it. Same thing, same answer for Nancy. Laura also wants to do a self-directed IRA session, so I guess I'll get a chance to do that. So, Nancy, you don't have to submit your loan application today. It depends. So let me see if I can get you a slide up, the right slide up. I give up. Anyways, rather than fumbling with the damn slide deck anymore, I'll just give you my best answer. You don't have to submit today. If you're an entity and you're applying for EIDL benefits, you can apply. Starting midnight this morning was the first time you could apply. If you're a sole proprietor, independent contractor, then the date will be next Friday at 12 a.m. Eastern. Carrie, let me see if I can find you here. It looks like more of a discussion than a question. Hey, Carrie, you're unmuted. Renee was able to come on just like that, but everybody else seemed to be having trouble.
Hi, can you hear me?
There you are. Yeah.
Hi.
So yours seemed more like a discussion than a question. So
We can leave that for later if it's off topic too.
No, let's go. What's your situation?
Well, I have 6 total properties. I used to sell REOs, so they're some old REO properties. All of them are free and clear. I just did a accessory building and I owe $100,000 on that, but it's all interest free right now.
Okay.
Still getting rent. So I just wanted to know what you would do. I know you have properties too, so, and I'm in California. Who knows?
Yeah. Do you have equity lines on any of those properties?
No.
Do you have a lot of cash available?
I did until I just built that house.
Yeah. I mean, I think what I would be doing right now in this rate environment, because a lot of your home equity lines are actually going to be, it's like LIBOR plus 1.25, prime plus 1.25.
Mm-hmm.
So you're looking at rates and I mean, hell, like sub 4s on that. So if I tend to stick with nothing larger than a regional bank. I like community banks and credit unions even more, but like go to a credit union and say, listen, I want to put equity lines on these properties. And here in Roanoke, if you have over an 800 credit score, excuse me, with where you're in California, I don't know if so.
I'm
we
in
have,
Northern California. I'm in Sacramento. Well,
Okay.
it's funny because my credit score, I think, is in the 700s. And I
Okay.
actually just got turned down for a line of credit.
a
So
business line of
it was
credit.
kind of interesting because I always thought 700s credit scores were good, but I don't know.
So with the lenders, I've the credit unions and the regional banks here. If you have a 720 credit score, you can get up to an 80 LTV on your on a home equity line. If otherwise, if you can't get a home equity line, go to a community bank, talk to their commercial banker, and tell them you'd like to do a cash out refinance on your stabilized rental properties. Now, a lot of times you can get an 80 or an 85% LTV on that, but that's going to be at a commercial rate. So I would suggest the home equity line first because you're going to be at like prime plus 1.25. Where with commercial, I mean, it's pretty interesting what's happening behind the curtain and how rates are reacting right now. But there are commercial lenders locking rates sub 3 on some programs. But if you just walk into a community bank and ask for a cash out refi, you're probably going to be at 4.25. So it's going to be similar to a HELOC in a lot of cases. So, and the difference there is your personal credit doesn't really matter. It's asset-based lending. So they're going to look at that and say, okay, we'll give you 80% of what it appraises for. And a lot of times, like especially in this environment, they're just doing AVMs, like automated appraisals. But for anyone who has, if you have good credit and you have a lot of equity in properties, like the program I used, it was over an 800 credit score. You could get a 90 LTV HELOC. And it was literally turned around in a matter of a couple of days, and it cost me nothing to set up, no closing costs or anything. And that was with First Citizens Bank, which I think they're in like 12 or 14 states now. They were a small bank out of Charlotte or Raleigh, and they've been in acquisition mode. They're becoming a larger bank, but they have really good loans. But regional banks, local banks, credit unions, lines of credit are great. It's just good to have strike money. And the great thing about the home equity line of credit, if you can go that route, is you're not going to have a bunch of closing costs and origination.
Right.
Whereas if you have to go with the commercial, then, and if you go to one community bank, are all 5 houses in the same market?
Yes, they are.
So you can actually get a blanket commercial lien. You can get one loan and reduce your closing cost, your origination cost. So you could go to a community bank and say, hey, I want to get a commercial loan on like a cash out refi on these 5 assets. And they can do one blanket lien across all 5. And then if you ever want to sell one, you can do a partial release. But that's probably it's going to make it easier, faster, and more affordable to access that equity.
If I want to buy other properties.
Yep.
Okay.
Yeah. And congrats on all your rents being paid. That's really awesome. I'm glad to hear your tenants are doing the right thing.
Thank you.
Especially in your state. I know
Yeah.
Sacramento has been a bit of a shit show lately, huh?
Oh, it is a shit show. Mexico's looking real good right now.
I know my buddy's got a house and he's office. Well, he had offices in Sac. He's got a place in Rockland. I can't remember, just above that. And he's like, it is a damn mess.
Oh, it is.
So, all right, Kay. Well, thanks for being here.
Thank you.
All right. That's a good question. So Coltu said, I often employ my children ages 17 and 14 to help with my business and pay them as a subcontractor, not payroll. Do you think they would qualify for either program being under the age of 18? I don't think so. I guess, let me see if you have a microphone. My first question is, are you issuing them 1099s? All right. Coltu, you're unmuted if you have a mic. As far as them being minors, I don't think they're going to apply for these programs. I have not seen anything that explicitly disqualifies minors, but I haven't seen anything that says they are eligible either. I haven't seen any age requirements. So I'm going to go off an assumption here and say probably not. Actually, as long as you're old enough to work in your state. Now that I think about it, most states will let you work at least 15 or 20 hours if you're 15 years old. So I'm going to take my answer back, and I think that probably yes, you probably can count that as what you would normally pay them as contractors. You probably can cover on as a payroll portion of these products.
Meaning you think that they would be able to apply?
I think you can apply for like the PPP from your entity starting today. And then when you're granted that loan, you can pay them like, because you're normally paying them, right?
Yeah.
So you can pay them with the PPP proceeds and still qualify for loan forgiveness because they are contractors. They're a legal working age, even though they're minors. I don't think they can apply. I don't think they have, this is a gray area. I mean, this is something to ask a CPA or a tax attorney, but from what my mind's struggling with is this person is a minor, so they can't really legally enter into an enforceable contract.
That makes sense.
So does that mean that they can't legally be a business owner? Like
Right.
to be and in the definition of the SBA, and I don't know. I think call your CPA or attorney and talk about that. But I think that you can certainly qualify for programs that will benefit them directly. So instead of them getting their own benefits, you apply, get the benefits, and continue paying them what you've been paying them. And as long as you don't lay them off or not pay them, fire them, then at the end of this, you have 8 weeks of payments that will be covered. So for the next 2 months, you can continue to pay them what you've been paying them, and that'll be forgiven.
Okay, great. Thank you. Appreciate it.
Yep. All right. Nancy said, so a sole proprietor can't apply until next week. That is correct. Today is the opening for entities. All right. So Carolyn, this is driving me nuts. Okay, Carolyn, you are unmuted on my side if you want to talk.
Can you hear me?
I can hear you well. So I think you and I have spent like 12 hours together on webinars this week. Are you tired of me yet?
Not yet, not yet. I'm enjoying it.
So are your tenants not paying?
Well, no, I have a couple landlords, clients, and I actually spoke with them today. And, I was letting them know some of the information that I learned about what you're going over now, like the different loan options and things that are out there. But several of them have told me that their tenants are not paying. They've called them and said they lost their jobs. So they're kind of scrambling and trying to see what they're going to do.
So the best thing they can do is immediate, and I'm assuming they have debt service, right?
Some do, yes.
Yeah.
Mm-hmm.
The best thing they can do is pick up the phone, call their lender, and say, "Don't expect rent payments. I've disconnected auto pays." And I don't know if I saw this somewhere. Someone asked if this can negatively impact your credit score, and the answer is no. That was written into the CARES Act. So there's basically no recourse for the tenants, no recourse for mortgagors or mortgagees. They're going to be safe. And so far right now, all the investors I know, all the buy and hold investors I know have gotten 6 to 12 month commercial loan forbearance, even though it's not a government backed loan. It's not part of what was issued in the CARES Act. It's banking is, they have to cooperate. We're all in this together. So the first step should be get on the phone, call your banker, let them know that you need to start a forbearance and that the mortgage won't be coming until you can find some resolution and clear the units. Things they can do. I mean, I've been sharing ideas with landlords I work with and the guys I'm kind of coaching. You know, offer them, just say, listen, I understand that you can't pay the rent, but I'm still expected to pay my bills. So I'm going to give you $500 to go back and live with your mom and dad. If you can just please, if you can be cleared out by tomorrow, I'll hand you $500 cash as you pull out of the parking lot, and get them to go somewhere else so you can free up a unit. And you might be able to get traveling healthcare workers. You can go to like travelingnurses.com. There's 3 or 4 of these websites where you can list these things. And even if you have to plow it full of furniture and have it as a furnished corporate rental, find people who are working, who are stepping up and being part of this crisis. So maybe it's a deployed guard member from the other side of the state. Maybe it's a healthcare worker that had to come in to help in a hot spot. And you can also reduce the rent and take prepaids, like get 6 months or 12 months of prepaid rent, whatever you can do. But have them get the forbearance in place, then start thinking creatively, how can I clear this tenant without, without being in a courtroom? What can we do as people to better the situation? And then who can I replace them with that I know is going to pay me? And how can I incentivize them to do that? So those are some of the things that I've been talking people through is just, not everything has to be so damn formal. Like, we don't have to issue unlawful detainers and threaten people with our legal language. You can knock on the door and be like, dude, I understand times are hard, but can you help? Can you help me help you? And offer things like that. And if those landlords have, if they're holding their assets in a real estate investment company, then they can look to these loan programs. If they're paying, if they have guys on payroll, their handyman, anyone else, and they can use it for general operations. Now, one of the challenging things with a lot of business owners, and I talked to a friend who he got a very successful business. He does DJing, weddings, and like bouncy houses, you name it. He caters, he does all kinds of stuff, but he just loves what he does, and he's never bothered even keeping books for his business. He doesn't do payroll. Like, so he doesn't qualify for most of these things because he's not running his business like a business. So that's the challenging part. If these landlords are just taking everything as a cash distribution, they've never done payroll, then they don't qualify because they don't have employees. They don't. And there's a lot of uncertainty around that. So if you're a single member LLC and you make $1 million a year and you pull it all out as cash distributions, like, does that count? And I haven't been able to get clear answers, but they may be covered that way. They could take one of these loans and cover it as cover their own income as a general operating expense or payroll expense. I don't
Chad,
know.
the forbearance thing that you talked about at the beginning, is it the type of forbearance that they're going to have to come up with a lump sum at the end of it, or?
There's a lot of uncertainty around that too. So some commercial lenders are saying, we'll give you a forbearance, and then whenever the forbearance is lifted, between now and then we'll meet and we'll work out a repayment plan. So there's a few ways it could look. You could lift the forbearance, and all of a sudden you've got a balloon of all the back payments, principal and interest that's due that first month. That's pretty unlikely because we know the result of that is going to be a massive wave of defaults, right? The other thing you could do is basically say, all right, it's not going to be a balloon, but we're going to flatten the curve, and we're going to take this out over the next 6 months. You're going to double up payments. So you haven't made us payments in 6 months. You're going to make double principal and interest payments for the next 6 months. Again, that's going to be hard for most people. So it's probably going to cause a bunch of defaults. The other option, and I think the most likely that people will settle in on, is they'll actually re-amortize the loan and tack that onto the back like a loan modification that you saw back in 2009, 10, 11, if you remember those loan mods. That's the most likely to not default. However, in 2008, 9, 10, 11, what we know that about 90%, well, between 70 and 90%, depending on the demographic, the income bracket, 70 to 90% of modified loans they redefaulted within like within the first 12 months. I think is that high statistic. A ridiculous amount of them redefaulted in the first quarter after the loan mod. even though their payments went down or they cleared the backlog. So it's, it's probably going to be right now in commercial lending. If it's not a government-backed loan, it's going to be up to the bank. And a lot of times, if they're using smaller banks, that can be portfolio loan, like portfolio paper. So the bank has a big incentive to sit down and talk it through and make sure that they create a program that is sustainable for both of you. So I think that, the name of the game with if you're caught holding the bag with a lot of debt and you can't pay debt service, it's communicate early and communicate often, and don't hide from your banker. Make sure he knows everything that's going on, and they have a lot of respect for that. I mean, I've helped commercial banks clear big portfolios of assets off their books, like community banks. And the thing they hate the most is when the payment doesn't come and nobody will answer the phone. And it just destroys banking relationships. But if you're willing to step up and look them in the eye and talk to them about what's happening, that's why I like community banks. They'll work with you. But any bank right now, they have to. Like they know that if they try to play hardball, they can't handle the amount of defaults coming through, and it's going to wreck their lending ability. So if they try to even when the forbearance is lifted, if they try to take a hard line on everybody, they're going to cripple their own lending ability. So they have to find a balance here too.
Yeah. Okay. I'm gonna give him that idea, at least see if maybe he can get some of them out by offering a little cash incentive. That might work.
Yeah.
Thank you.
What state are you in?
Florida, South Florida.
Yeah. Yeah, hopefully that'll work.
We're in like the full, we're in the full lockdown area. So majority of people are not working right now. So a lot of people are in the same situation.
Yeah, but I think, what happened last time, a lot of people are going to end up moving back home or moving back in with a roommate or something. So if that person already has that lease and they're struggling, and you can talk to them and be like, hey man, do you have anywhere else to go? And if the answer is no, then back off and be like, all right, well, thanks for answering the door, and go to the next door and just see like who of all your tenant base, who does have somewhere else to go. And can you lend them your truck and trailer for the day, or pay $500 and have a U-Haul show up for them so they can get closer to their family. Just get the hell, just let them out of their lease, forgive the whole damn thing, clear it, and get somebody else in there on different terms. I know people with Airbnbs that, a lot of people are just struggling, but I know folks with Airbnbs that just cut their rates by 60% just to fill the real estate and cover the debt service, and it's working. So if they've got an EIDL TV on their loan, then in theory they can afford to, if nobody in the whole complex was paying rent, if they could clear it out and offer it at a 20% rent reduction, then they can at least make their payments, right? Now, the other thing to consider is that is softening market rents, but I think that's happening anyways. The average American is currently spending 35% of their gross earnings on rent, and 1 in 4 spend more than 50%. And that's unsustainable, and it's needed to correct for a while. So that's the other thing you can talk to your landlord clients about. You should expect, I anticipate rent softening anywhere from 10 to 20%. Which is going to just rip through a lot of these guys that overpaid for, when cap rates were compressing. You're going to see a lot of harm done by the rent correction, but I don't see how it could not happen when you have 10 to 20% unemployment, and it's taking, what's it going to take us to get an economy back online? Probably a quarter to get things back to normal. So there's going to be an impact. People just have less money, and they don't have that 35% of what they used to earn is certainly more than they can afford now. So prepare them to tighten their belt and say, we're probably going to see rent corrections. They may even need to rework those loans with their commercial lenders. But my best advice to any landlord is communicate early, communicate often, and be really transparent and honest with your bankers.
Yeah. Okay. Thank you.
Yep. All right, guys, we've got about 13 minutes. Laura Gray said the Florida governor is prohibiting Airbnb, resort, and hotel rent. I know that they made some moves for that in North Carolina too. I had some friends that rely heavily on that, and they weren't very happy. All right, I'm scanning the chat box now, guys. I was in the Q&A. Teeny asks, can a realtor with an S corporation apply for payroll protection plan? And if yes, how? Yeah, you should be able to. So if, assuming that if your S corporation has more than 2 employees, so you have to have less than 500, but more than 2 employees. Otherwise, you can apply for the EIDL and you should be able to get the $10,000 grant. But you may not, if you're a single member S corp, you may not be able to get the PPP. Good question. So Lauren asked, how do you get an updated status on your application? I don't know. And on one of the programs, like the program that I showed you that was already phased out, that was the first one I applied for. And I did get some auto emails. On the EIDL and the other things I've applied for, I've had basically no communication. They say it's funding in 3 days. Today's day 3 or 4 for me. And I haven't gotten any correspondence. Dave Griffin, yeah. So basically everybody. So sole proprietors, realtors, independent contractors, gig workers, just about everybody. Yeah, that's so Michael. Let me see if you're still here. Oh, this cursor's killing me. Hey, Michael with Blue Globe, you had a comment about talking to your local bank. Thank you for sharing. You're unmuted if you want to join us. Michael said, I contacted my local bank. They were ecstatic to hear from me and were weeding through the process. Use your local bank. They will remember your loyalty when this is over. Absolutely. Hey, Michael, I think I hear you now.
Yeah, Chad, thanks for all the great information. I've been on a couple different presentations, and this one is probably the most detailed for moving forward. And
Thanks
I
for
had a
that, because
question.
I feel like I'm botching it here. I'm like, so I'm glad I'm not doing a terrible job.
I was on an attorney-driven one earlier this week, and they were just getting the information out, and they just put a post on Facebook that the system is completely overwhelmed because there's way too many questions and people don't have any idea what they should be doing. So what you're doing today is completely needed. So bravo to you, because it's the most complete information I've seen so far.
Well, thank you, Michael. And I'll do a better job, guys, of it'll be clear in the recap. I've been staying up. I feel like I'm in college again. I'm producing like 6 hours of fresh content every week, and I still have Probate Mastery and all these other calls and stuff. So I will source everything and organize it a little bit better than it has been here. But thank you for your kind words, Michael.
Well, don't worry about it, Chad, because if anybody on the call is ever worked for the government, been in the military,
Yeah.
There is no such thing as quick deployment. It is hurry up and wait. And the only thing you can count on is the time the mess hall opens and closes. That's the only guarantee that they're going to make. So, yeah, don't worry about that. But I did have a future question. It's down further in the chat. Probably won't get to it yet, so many. But if someone's over the age of 72 looking to pull money out of the Roth IRA, I've read a couple different things, and since you had some familiarity with IRAs, is that taxable at the age over 72? Because we're looking at taking the resources out of that and putting it into business, preparing for some opportunities that are going to pop up in the near future. But I read somewhere that at a certain age it's not taxed, but it's kind of unclear.
No, I don't believe it is taxed. So let me get my thoughts straight here. You're going to be pulling the money to make an investment, correct?
Correct, in the business.
Okay, so what I would recommend is actually leaving it in the IRA, but roll that over to a self-directed custodian. And because you don't actually need the money to spend, you need it to invest. So let's grow the principal tax-free as well, right? So let's take that over to a different retirement account, use that retirement account to make the gains, and then you can take your money out, over time and get all the available tax benefit by doing it that way. So check out Equity Trust, Entrust, and Provident Trust Group. Those are the three that that was my short list when I set up my self-directed IRA. But I think what you're going to find is the most tax benefit will be in leaving that in an IRA, but making it self-directed. So you're not, if you take that money out as a distribution, even if you don't pay taxes on it, you're going to pay taxes on the gains that you make with it. Where if you leave it in the IRA, you can make those gains tax-free and build capital faster. You can preserve capital over time and scale faster through this time. Because one thing's for sure, there is going to be a steady flow of opportunities, and those who are well capitalized are going to be able to take advantage, to the greatest extent. So whatever strategy you go with, just make sure that your number one priority is preserving cash. So if you can do a quick assignment and make 50 grand, is it better to leave that, like take some extra steps and do that assignment from the self-directed IRA so that 50 grand is not taxed? It becomes principal that you can use on the next deal tomorrow. That's what I'm proposing. And just keep in mind, like, even if you could, I call it having your money in a fence in these retirement accounts. Even if you can take it out of the fence, now anything that you generate with it is going to be either a capital gain or a regular income. Where if you leave it in, it's tax-free until you withdraw. And if they're over 72, they may not have to pay taxes on the withdrawal.
Okay, great. Yeah, that sounds like a great plan. I think we actually might do a hybrid and pull some money right away to cover some immediate expenses and an opportunity, and then set up what you just suggested, because we've got to make some moves on some cash flowing.
And the other thing you can do for certain, like what came down in the CARES Act, you can pull $1,000 or $100,000 today, and then you just pay that back over the next 3 years, and there's no tax, like there's no tax liability whatsoever. So you basically look at it as a rapid self-administered short-term loan with zero interest. You can get 100 grand and not pay penalties.
Yeah, see, we were looking at that as well, because we've got some mobile home and some RV park opportunities that have just come across our desk. And
man, I'm gonna tell you what, if you guys are looking for mobile home parks, a friend called me the other night. I won't get too deep into this. I have one off market. Only 3 people have looked at it. They were developing it, and they're gonna have to pull back. They're basically willing to develop the project and just hand it over to make their development fees. But it's basically 3.2 in and 3.2 and 4.4, or excuse me, 3.2 in and a 6.4 appraisal once finished. And this is, every trailer will be brand new, direct from the factory at wholesale cost. Like we're buying direct from the factory. And I had to pass on it. But if you're looking for mobile home parks, this is on a lake near Orlando. It's a super cool deal. If you want the details, you can email me and we can chat about it offline.
Yeah, I definitely will. We've got some investors, and we're looking for more investors to grow, because we think that over the coming next 6 to 9 months, there's going to be a lot of opportunities going into holidays.
Yeah, it's smart, man. I don't know if you've been on all these sessions, but I've been telling everybody, like, aggregate cash. If you don't have your own, go find people who do, because that's the way forward. Like the sooner we start deploying capital, the sooner we start clearing this mess up, and the less the market corrects. But yeah, it's you're doing the right thing, like getting funds together, especially if you can get blind pools of capital. Like, we don't know what the assets are, just commit your money. There's going to be lots and lots of opportunity. Somewhere
Yeah.
between 1 month and 1 decade. We don't
Yeah,
know
you
yet.
know, the thing about the SBA, I'm thinking that when the dust settles with all the stuff that they're doing now, I think that the SBA is going to have a resurgent. And think about 6 months from now, when the dust settles with this, someone's going to be able to go in and apply for a new SBA loan to start a franchise, expand a business, start a business. And I think the wheels will be completely greased at that point. And I think they're going to want to give away money in 6 to 9 months to start a business, buy a franchise, expand, whatever it may be, because they're going to have to get the economy rolling again. So beyond what's going on now, just applying for an SBA loan brand new in a few months, I think is going to be a completely different ball game, and it's probably going to be a wild, wild west cash grab, if you ask my opinion.
Yeah, I think a lot of, you know, what I hope comes out of this is the awareness that small businesses are the lifeblood of this country. We seem to have forgotten that, and we like to point at all the Wall Street indicators and say that, oh, the American economy is so great, and this is the Trump bump and all this shit. The reality is the average American small business was not doing too well before this happened. And I'm really encouraged that the SBA stepped up and that we actually get a Main Street bailout. And even below that, they're injecting money through the bottom of the economy. So I think that one of the silver linings in this will be the awareness of just how important small businesses are to this country and to our economy, and how important those community banks who do lend more responsibly. I just hope that because this came on so fast and no one escaped it, that everyone will listen and pay attention and realize that these are the businesses being bailed out now. It's the best thing they could possibly do, rather than letting another $3 trillion, $4 trillion sit on corporate balance sheets and manipulate markets and then point to that and say, you're good. Good thing you're American. You're lucky, when 1 in 4 can't pay their rent. So I think there's some silver linings here. It's definitely going to be it's going to be a conundrum. Like it's going to be a mess to clean up and figure out how all this works in the new economy. But
Amen to that.
I'm hoping that this starts the dawn of small business being the hero.
Exactly. Great.
All right.
Thanks,
Well, Michael,
Fred.
thank you for your input, sir. So Dave Gwynn, I still lack one. Oh, Dave, you're here twice. I'll unmute both of you. You must have been in a parallel universe when you joined today. Dave said, are self-directed IRA LLCs eligible for the various loans and or grants, which are non-recourse? We're about to find out within the next couple of days. You there, Dave?
Yeah.
So no one can give me a clear answer on this. And so few people really understand self-directed IRAs with checkbook control, excuse me, including the tax professionals that I ask questions to. So I went ahead. I went ahead and applied, because it is technically a business. It has its own. I've got my own balance sheet, P&L. Like all the books are up to date. I can back everything up. Where with most people, if you have a self-directed IRA, it might not be treated like a company, but mine is. So I'm going to go ahead and apply, because it doesn't. The only employee is. Technically, it has no employees. But I'm going to apply and sort it out on the back end before I sign paperwork. Then I'll have a chance to know. But I went ahead and applied from my self-directed IRA LLC just to see if it's eligible. Because the reality is I've got 3 mortgages, all one is past term, and we'll know on the 15th if the other 2 default or not. But it is an LLC, and it is probably going to get economically harmed.
Yeah, and I guess the other big thing is whether or not they're going to require a personal guarantee.
Yeah, I don't think the grant money doesn't. So up to $25,000, or excuse me, up to $200,000, it's not personally guaranteed. And up to $25,000, it's not even collateralized. It's just like free money.
Yeah. Yeah, it's going to be interesting for sure. And with that application that you went through in 6 minutes or whatever for each of those, which loan does that specifically relate to? I'm
So
kind of
that's
getting.
for the EIDL, but the grant portion. And I have one.
Okay.
Can you see my screen right now?
Yeah.
Do you see all the Zoom boxes? Do I have to keep moving these?
Nope. I just see your disaster loan assistance site up.
Okay. So this is the application, and I can drop it in the chat now. We'll also have this in the notes. But that's the app you're looking for, and it just kind of this is all the copy. This is all the information. But you basically just go through and say what type of entity you are. Like I just chose for all mine, it's just applicant. Well, if you're a sole proprietor, like if for a realtor on this call, if you don't have an entity and you're a sole proprietor with or without employees or as an independent contractor, you would click this. For mine, I had structured entities for, actually, no, I did one like this or two like this and one like this. But you just kind of say who you are. And it's like a 4-step application, just takes a few minutes. It's pretty self-explanatory. And then the other thing I'll send you if you didn't see it. So this is like this comparison is really useful to kind of see what goes where. So the payroll protection program is one program. The EIDL contains the grant. So this is up to a $2 million loan at I think 3 3/4. But in order to speed this up, the rapid deployment part of it was a $10,000 grant. So if you apply for more money, they'll just knock this $10,000 will go toward your maximum of $2 million. But I'll send all this stuff through so you guys can take your time and digest it. It's a lot to wrap your head around. Ask me how I know.
And how does that application, coordinate with the local community bank?
So they will actually be the one. So I'm going to operate off an assumption here. So this is the application for the grant, basically. And I'm assuming that this will be put into a central system. And when the local banks figure out how they can submit the application for the PPP or the EIDL, the main EIDL application, then this will be uploaded, under your SBA username or whatever. Or actually so they had so many problems with the SBA site last week, 2 weeks ago was the last time I tried, where you had to use a username and password, and people kept getting kicked off. Like it would time out or kick them off, and it created problems. So they, from the way I understand this, they basically just abandoned that and said, here's a streamlined process. They built this new site. This didn't even ask me for a username or password. It did, and I can show you what one of the confirmations look like. The only thing I thought, who knows what's going to happen here. So I actually took a screenshot. Let me get one of my entities. So just in case, I screenshotted this. Actually, they did ask for my email. So I just got an application number. So I didn't actually get an email confirmation or anything, but I just grabbed this screenshot just in case. And that's what I have to show that I applied so far.
Yeah. Cool. Really appreciate it, Chad. Some great content again today. Great job.
Good. Thanks for being here, Dave. Okay, guys, I'm going to jump. We're past 2:00. If we will post this in our Facebook group, All the Leads Mastermind, on our Facebook page, all the leads on our YouTube channel. youtube.com/all the leads, and who knows where else. With it, we will try to aggregate all this information. If you had a question that you didn't get answered, join the conversation there. We'll try to keep it running, but I've missed 17 or 28 calls, so I'm going to jump back to doing what I do. Thank you guys so much for being here and allowing us to serve you. And we will be back on Monday. We'll have another session, maybe even on self-directed IRAs. But Monday at noon Eastern, we will have another series of Shift Happens. Thanks so much, guys, and make it a great day and weekend.